Good morning, all. I hope you're well. Can we just get a thumbs up in the chat just to confirm that you can hear me okay? I've connected to hopefully a better internet connection today. So I know that we had a few issues earlier on in the week. So today, first of all, welcome to the FX Street webinar. Today we're going to be talking about Cipher patterns and basically how I look to trade them. Now, I'm quite fanatical about this subject. If any of you are already members of the FX Street Premium and Discord service, then you'll note that the majority of my analysis, if not my trade plans, are based around Cipher patterns. I regard them as a great overlay, and we'll go into a discussion about why I believe they're so important when we have trade setups. So, Cipher patterns and how do I trade them? So, just a very brief discussion about who I am and what I do. So, my name's Ian Coleman. I've got 37 years experience within the money markets. I have a STA diploma, which is from the Society of Technical Analysts. Basically dictates that I should know what I'm talking about with regards to charting, if you like. I'm a part of the FX Street Premium team, as some of you already know, and my specialist subject is technical analysis, or the subject that I enjoy, I suppose, is technical analysis. I understand that news moves markets. I understand that we can't ignore data releases, etc. But in these sort of 37 years of experience, I've come to realise that yes, news does move markets, but it's patterns and formations that actually dictate where we could possibly go due to these driving forces. So the FX Street Premium team is your trading partner, exclusive, reliable analysis. We post the top assets first thing in the morning, and then we're open to questions throughout the day with regards to whatever products or whatever questions you have. Basically, could be on money management, could be on a chart formation, could be on a single stock. Instant expert access, so that's the Ask the Analyst feature, and then improve your trading instincts. So obviously all this is aimed at you becoming a better trader. At the moment we've got a 60% off scheme. You need to do that through the app, so you need to download, or you need to scan this QR code and download the offer through the app, because we are having a few payment problems at the moment. So let's get to the webinar. So what are Cipher patterns and how do I trade them? The Cipher pattern, or harmonic as it's also known, we're going to discuss basically how it's built. The Fibonacci or Fib levels, the hidden levels, which most people don't look at. We're going to talk about those. We're going to talk about Elliott wave formation and how harmonic patterns can actually fit into Elliott wave analysis. We're going to talk about building the pattern. We're going to talk about the 4 patterns that I concentrate on. There are more, by the way, but these I find are plenty. So it's the Gartley, the crab, the butterfly, and the bat. I've actually made note. There's 12 different in the products that I cover or I'm looking at the moment. There's 12 different patterns that I am seeing, and they're basically the most important part. How to trade them? How do I trade them? And it's quite this bit's obviously the most important part, but there are different ways of trading harmonic patterns. The hard and fast rule, which you'll read about in books such as Trade What You See, which is about harmonic patterns, will basically say that you should only trade the completion of the pattern. I'm not a believer in that. I believe that you can trade different legs of a formation as long as your signal is strong and as long as your risk reward is solid. One thing the cipher patterns have, which is very, very important, is that they do show us where to enter, where to place a stop and where to place a target. And obviously the R rate, your risk reward factor, is the most important part of trading. So what is a cipher pattern? The cipher or harmonic trading pattern is used to identify potential reversal zones in the market. Okay, they consist of 5 key points. X is the starting point. Then we've got A, B, C, and D. The pattern has strict fib levels or fib ratios. Okay, the end result, and this is the most important part of cipher pattern analysis or cipher pattern trading, is that the end result is a confluence area. And my mantra used to be that confluence is king. Okay, the more we can get different things lined up at one level, the stronger that signal or that barrier, be a support barrier or a reversal barrier, it makes it stronger. Okay, so sometimes you'll get people who look at fib levels, they'll look at Ishimoku cloud in certain time frames, so you might get a 261.8% extension. Elliott wave analysis might dictate that that's the end of the trend. Ishimoku cloud traders might then look to a solid cloud cover to highlight that it shouldn't be going any further. You might have a trend line resistance. Okay, the more that you can build, and again, we don't want to look at analysis paralysis, which we've also talked about before, but confluence, the reasons for certain traders to consider the trend to be finished is key or king to trading. And what happens a lot with people that are new to cipher pattern and cipher pattern trading is that they fudge the results. Okay, the levels, the fib levels, should be close. They don't have to be exact, but they should be close. Sometimes when I've taught cipher pattern analysis in the past, and I say to people that are looking at it, don't be embarrassed, go away, see what patterns that you can find, post them to me, and we'll break them down and see if they're real formations. And a lot of the time people have just got the most exaggerated ideas of what a cipher pattern is. Okay, so those fib levels, the extension and retracement levels, they have to line up. If they don't line up, then we don't get confluence. Okay, so cipher pattern or harmonic, we've just discussed. And remember, we've got 30 minutes to do this webinar, so we're going to go through it pretty quickly because I obviously want to get to the charts as well. So fib levels, hidden levels. Okay, in the Elliott wave theory, we concentrate on the main fib levels, which are 38.2, 50%, 61.8%. So they're the retracement levels. On a second wave retracement, it's often 50%, 61.8% that it retraces. In the fourth wave retracement, it's often 38.2% of the third wave. Okay, 161.8% is obviously the third wave, 261.8% is the fifth and final wave, or 423.6%, which is, I'm not going to say often, but it's seen sometimes in commodities and commodity-based currencies. Okay, cipher patterns, we look at 38.2, which is common, 50, 78.6. Notice there that we haven't got 61.8% in there, which is what a lot of the people, what a lot of analysts consider to be the prime retracement level, because it is the golden ratio. Okay, so cipher patterns omit that. We're not looking at that. 88.6%. Sounds a bit crazy, but if we can get entry levels close to 88.6%, then we can have a very tight stop loss. 127.2%. This makes up the butterfly. 161.8%, which is common, which is obviously the golden ratio again. 224%, which is an uncommon fib level, and that makes up the crab formation. 261.8% and 361.8%. Okay, and I've just put here show settings on TV, so show my settings on TradingView. And what I've actually done as well is the retracement levels. I've also worked out what they are for the extended Cipher patterns, so the crab formation, etc. So you'll be able to copy those down later on in this webinar. So the formation of a Cipher pattern, there are 4 legs to the formations. These are the XA leg, which is obviously the start of the pattern. You can't trade the XA leg because it is the start of the pattern. If you are in the XA leg, then it's more fluke than judgment. The AB leg, again, difficult to trade because that is the retracement of the first leg, or the retracement of the XA. What we can do, we can trade the BC leg, the CD leg, and we can trade the completion of the pattern. So the final result is the creation of 2 triangle patterns. Okay, the completed picture looks like a bat extending its wings, and obviously the bat formation is one of the Cipher patterns that we are discussing today. So we're looking for areas of confluence, the act of merging, or where 2 or more fib levels meet. So building the pattern, build XA leg can be of any length. Okay, it is from this wave that we start to take our calculations. AB, this is our first retracement and sets the tone for the whole pattern. Very important, okay, where this retracement level ends. If it extends past XA, then it's gone. It's no longer a Cipher formation. Okay, so the AB leg has to stay inside the XA leg for us to start to build a pattern. The BC moves in the same direction as XA, okay, but cannot breach level A. In other words, it can't make a new high, and it can't. These patterns have to stay inside. Okay, AB and BC need to stay inside. They can't extend through the XA. It's sort of a lot of the time, and I digress a little bit when doing these webinars, but a lot of the time when you're seeing these patterns develop, if you look at the daily chart, the AB leg and the BC leg will look like inside soldiers or insider armies. So you get a really strong move, which is XA. You then get this consolidation, which is as we're sort of forming this inside pattern, okay, with these insider armies, or inside candles. Analysts call indecisive candles. They are indecision because we're getting this choppy intraday price action. But the great thing is about them that if the calculations are right, they then give us this pattern to then say, yes, we continue with the trend, or no, that big bearish outside candle is actually a candle reversal, and we're going to go in the other direction. So BC moves in the same direction as XA but cannot breach level A, and CD, this leg is our finishing leg and completes the whole formation. The completed pattern offers a bearish or bullish bias, and I've put bias in capital letters there because that is one of the biggest biggest features of trading. Okay, you have to have a bias, a bullish bias, a bearish bias, or a sideways bias. And as we've discussed in the past, there is no other bias. Okay, it either goes up, down, or it goes sideways. And these formations can give us a bias, and we want to be trading with our bias. When we're looking at a weekly chart or a daily chart, these long-term charts, which we talked about before, we talk about the bias and whether or not you should be trading with or without, or with or against the long-term bias. We had some audio issues last time. I've got full bars on my internet connection, and I did a check earlier on. So I don't think it's an issue on my side, unfortunately. So I don't know if it can be corrected, but so that's building the pattern. We're going to talk about Gartley, crab, butterfly, and bat. And I'm not going to whiz through these, but like I said, we've got 15 minutes, so let's just gather speed, if you like. The Gartley, the 2-2-2, as it's also known. XA, first leg of any length. AB retraces 61.8% of XA leg. BC moves towards A but does not breach that level. Common pullbacks are 38.2, 88.6 of leg AB. CD moves to 127.2% or 161.8% of leg AB and 78.6% of XA. Sounds complicated. Notice how there's options, okay? There's the retracement level has an option of 38.2 or 88.6, and the extension level has an option. And basically, I've put one here which is a live chart at the moment. This is Aussie Swiss. It's a 4-hour chart, and here we can clearly see that this impulsive move to the upside, okay, on the left-hand side, from the start of November until the 7th of November was strong. It was impulsive. That's our XA leg. Okay, I don't know if you look at a daily chart because I obviously can't come off this this webinar, but that has the ability to be a bullish outside candle with this move again on the inside being inside bars. So that XA leg retraces to 61.8%. Why can't I trade the XA leg, or why can't we trade the XA leg? Well, basically, I don't know if it's going to stop at 50%, 61.8%, 78.6%. But how can I know that it's going to form a Gartley pattern or a inside back pattern or a butterfly formation unless I know where that first leg finishes? So as soon as that first leg finishes and it confirms by either higher highs or higher lows, etc., and then it starts to move to the upside, I can potentially trade BC up, okay? But with the knowledge that BC will often only rally to 38.2% or 88.6%. Where is my stop loss placed? Well, it's placed above 61.8%. So it's based below 61.8%. or B level. So I can take the BC higher if I think it's going to stretch up to 88.6%. Unfortunately, I can't do a great deal about that. I know some people are having audio issues and some people aren't. Like I said, my internet connection is spot on. The only thing that I can suggest is that Judith is taping or recording this session, and perhaps watch it afterwards on record, because Judith's saying that this sound is fine on her side, which is the recording. So we can trade BC, we can trade CD, and we can trade the completion of the pattern when we see these two triangles completely formed. One thing that I would say, and just to be slightly wary of, when you get the completion of a pattern and the completion has the confluence level and it's 161.8%, you need to be sure that that's not just a fourth wave correction going back to Elliott wave. Okay, so just one of the little caveats to throw in there. And again, I've shown two Gartley formations. This was a platinum. This was platinum. It's a daily chart. And if you watch last week's webinar when we talked about bearish outside days and bearish outside candles, we've got that beautiful bearish outside candle there towards the end of October, and we've seen a substantial move to the downside. So that's the Gartley. The crab, XA, first leg of any length. Again, AB retraces either 38.2 or 61.8 of XA. BC moves towards A but could not breach it. Okay, common retracements are 38.2 and 88.6. CD moves to either 224 or 361.8% of AB. So here, and ignore the one on the left-hand side. Oh no, sorry, don't ignore the one on the left-hand side. The one on the left-hand side is actually the one that I'm talking about. The one on the right-hand side is one that's developing. Okay, so sometimes we will also see overlays. In other words, one pattern will then move into another pattern. What we'll also often see is inside patterns. So in other words, you see one pattern on the daily chart and you might see another pattern on the 1 hour chart. And these, obviously, the more patterns that you can combine, then the stronger the signal. So here we have a crab formation. You can clearly see at the top, we've got that 161.8% extension level from XA, and then we've got a 224 extension level from AB, and that forms the bat formation. And obviously, silver had a substantial correction to the downside, now looks to be forming a Gartley pattern with us currently being within the BC leg. Butterfly formation, the butterfly XA first leg of any length. In fact, I'm not going to go through these because I'm sure we can send you the slides afterwards, so that's not an issue, and you can go through these levels yourself. I'll just show you the actual charts. So here we've got the butterfly formation, 127.2% extension of XA, 161.8% extension of AB. This one was actually virtually perfect, believe it or not. And just notice, if you will, there how close those fib levels lied. So that's your confluence. That's what you really want to see. Okay, 1.3428, 1.3423, and that's off a weekly chart. So you're talking about 5 pips difference in a weekly formation, and then you've had this strong, really impulsive move to the downside. And the last one, but not least, is the bat formation. The bat formation and the Gartley formation are often seen in wave 2 of Elliott wave. Okay, if you think about that, they're called inside patterns. So the bat and the Gartley are called inside patterns, and they're often that retracement that we see in wave 2 of an Elliott wave count. And why is that important? Well, if you can catch the completion of the Gartley and of the bat formation, well, the bat formation is 88.6% of wave 1. That means if you're trading an Elliott wave formation, you're buying it at what you believe is the start of wave 3. You've got a tiny stop loss, and you're going to see, or you're expecting to see, a 5-wave extension to the upside. So your risk reward sometimes for these setups can go on to, 10, 15, 20R. So the bat formation, these inside patterns, if you can catch them on Elliott wave, they can really be substantial trade setups, basically. So this is an inside pattern. So it's inside, it completes inside leg XA. So here you can see 161.8% extension, and this is New Zealand Swiss at the moment, and a 88.6% pullback. So basically what I'm trying to say there is, if you believe over the long run that New Zealand Swiss is going to go to the downside, and that whole move up in leg CD is wave 2, you place your entry at D, your stop loss above your stop loss above X, and you could have a very, very substantial move in the other direction. So how to trade them, and this is obviously the bit that everybody's worried about. Why use Cipher patterns? Well, the main reason is that we get a dedicated entry, we get a dedicated stop, and most of the time, and that's why I've put it in commas there, or in brackets, is that most of the time we'll get a target. Okay, the hard and fast rule for most people that trade Cipher pattern analysis is that they will only look to trade Cipher patterns when they are complete. Okay, I buck that trend a little bit in the fact that yes, I like to trade them when they're complete, and I've got quite a few patterns that I'm looking to complete, i.e. Euro CAD will be a fantastic setup if it gets there for what I believe will be a medium-term swing low. But also, if you're getting if I'm getting a signal, I don't mind trading the other legs that we talked about. Okay, particularly the CD leg. So Aussie Swiss at the moment, looking to trade that CD leg to the downside. So let's just go to the charts and see if we can just note some Cipher pattern formations and how I find them. And you can also have a look at the settings that I use for the retracement and extensions. So the first one, and I've got them all highlighted on the right hand side here. So Aussie Swiss is obviously red because I'm trying to get short Euro CAD, Euro Sterling, Euro Yen. These are all amber because they're setups that I believe are going to happen, but I'm not there yet, basically. So Aussie Swiss, and there's actually sort of two setups here, but this is the sort of one that I'm interested in. So the most important factor, I suppose, is getting the first level right, okay, which is the retracement. So if we go to the fib retracement tool, pull it up here, okay, you can see this is 61.8%, this is 78.6%, but I want to show you all of the Cipher pattern levels that I have. So let's just click back on it, okay, 0.341, 0.618, 0.786, 0.886, they're all common. These are uncommon, okay, 0.545, 0.726, 0.448. And the reason that they're important, and I'm just going to show you off just a random one. So say this one had stopped here, extend it up, okay, and then just put it in a little bit. That one, the 0.448, that makes up this pattern, okay, which is the extended crab. So all of these retracement levels are quite important. I'm just going to click on it again so that you can take note. So 0.341, 0.618, 0.545, 0.726, 0.786, 0.886, 0.448. Seems like a lot, okay, but remember this is our first leg, and we're not trading, as we said before. We're not trading this leg down. We're either trading this leg up or we're trading this leg down. And I'm trying to trade this leg down at the moment. So what did I get on the first leg up, if you like? So impulsive move to the upside. We stopped at 78.6%. That immediately alerts me to the fact that I'm building a butterfly formation. So I then take my extension tool, extend it down, extend it across, take it from XA, which is the important part. What have I got? I've got a near pip perfect confluence level at 57.07. I can then draw my pattern. I then know what leg that I'm trading at. I've got a trigger to short this. There, probably at 60, not quite sure. You know, it's all about risk reward. The risk reward factor plays key to anything. Okay, so I'm looking to get short. I can then place a stop loss above the swing high, I know my target level, risk reward, why are Cipher patterns important, risk reward, etc., etc., etc. Swiss yen, and this is where, you know, when we were talking about again a great move to the downside this morning. Big picture analysis. Okay, you don't want to be trading against the trend. You don't want to be trading against the long-term trend. So it's also when you can find patterns on a medium-term scale, then you can potentially get some huge swing trade opportunities. And again, going back to the outside bar or the candle formation webinar that we did the other day, what do we see here? We see a bearish outside candle, overbought. Okay, that would be an RSI crossover. We see the move to the downside. We see a bullish outside candle, a move to the upside. But you don't want to be setting up as a buy trade unless you're pretty convinced about it, and you've got a short-term target. You don't really want to be setting up as a buy trade on Swiss yen when the medium-term outlook is still for lower levels. Euro CAD, I'm not going to go through them all. Do we run out of time? Again, really, if you're, sometimes I can see them, but only because I've been searching for them for so long. But the first part of trying to hunt for a signal or a pattern, I suppose, is to take the swing high. Okay, so use the retracement tool first and just pull it up to the swing high, and then you can start to work out your Cipher pattern, okay, from the levels that you're expecting it to extend to. And this is obviously EuroCAD. We've been talking about this for a while. The reason that I quite like EuroCAD is because I want to buy the dip. I don't want to be trading this trend at the moment. Okay, so it's telling me I don't want to be buying it, but I want to be buying it down here. Okay. Silver we've talked about. Euro sterling is a crab formation. I'm just going to go through some of these. Euro yen is a daily bearish formation. Sterling New Zealand is a 8-hour bearish formation. DAX potentially is a 4-hour bearish formation. And sterling yen is a bearish formation at the moment, but has the potential to turn around at much lower levels. And also dollar yen we're seeing at the moment, something that we talked about this morning in this morning's report, the fact that the yen basket is breaking upwards. So dollar yen is breaking downwards. And a lot of people, I think, are going to get wrong-footed on DXY or the dollar denominated products because we saw a flag formation. Probably going to be quite choppy dollar yen because obviously two risk products. Okay, it's we've gone past, or a little bit past time, and we have another meeting coming up. So I'd like to thank you for attending. Like I said, I do apologise for those that have had volume issues. We have recorded this webinar, so I suggest, or I'll keep an eye out and I'll post a link to it when it's been published. Okay, guys, many thanks. Bye for now.